Hello everyone. Welcome to the Blockchain News Club. Let's take a brief intro into today's crypto updates before going into the details. Lawmakers in the US are under more pressure than ever to propose legislation overseeing digital assets, after last year's losses. The UK formally laid out plans to regulate the cryptocurrency industry, with the government looking to rein in some of the reckless business practices that emerged over the past year and contributed to the demise of FTX. Should cryptocurrencies, which have no physical token, behave like the US dollar and other fiat currencies? Let's take a look whether regulations will put an end to crypto's potential for unprecedented financial inclusion. A recent survey showed that 8 out of 10 of the company's high net worth clients who had between $1.2 million and $6.1 million in investable assets have considered investing in digital assets. The Ripple vs. SEC lawsuit appears to have reached the final stage wherein the judgment could be produced in favor of the company. The demand to relist XRP on exchanges is becoming more prominent due to the ascending positive sentiments. Ripple, XRP, and the entire crypto industry won an important partial victory in its fight against the SEC's overreaching regulation by enforcement, thanks to attorney John E. Deaton. Ripple's partner D-Money joins forces with Visa for global payments in Thailand. Nevada-owned International Bank of Australia gets approval to launch payment solution in Australia. XRPL Labs lead developer Yatzy Wind has let slip that developers are working on an XRPL-powered QR payments feature for the XM wallet to allow users to make payments at retail stores. FinTech released its newest quarterly XRP markets update on Monday that reports records demand for its XRP-powered liquidity solution. Before we dive deep into today's updates, please subscribe to our Blockchain News Club channel. It will help us immensely. After last year's losses, lawmakers are under more pressure than ever to come up with rules for digital assets. The bankruptcy of crypto exchange FTX and the arrest of its former CEO Sam Bankman-Fried have had a lasting effect on the digital asset sector. But it has also left an indelible mark on the politicians and policymakers who are supposed to regulate the industry. When it comes to putting regulations on cryptocurrency, some lawmakers were already on fire. Last year, President Biden signed an order that told agencies to work together on digital assets. And in the summer, Senators Cynthia Lummis and Kirsten Gillibrand released a bipartisan crypto bill that, among other things, would increase oversight of stablecoins and crypto energy use. The U.S. Securities and Exchange Commission and the Commodities Futures Trading Commission are also still fighting over whether cryptocurrencies are securities or commodities. But as the number of crypto companies going bankrupt because of FTX keeps growing, government officials are feeling a new sense of urgency about how to regulate digital assets. After the collapse of FTX, Britain makes plans to regulate the crypto industry. The UK has officially announced plans to regulate the cryptocurrency industry. The government wants to stop some of the risky business practices that have sprung up in the past year and help bring down FTX. In a much-anticipated industry consultation that started on Tuesday, the government suggested a number of changes that would make the rules for crypto asset businesses the same as those for traditional financial firms. Among the ideas that were put forward on Tuesday was a plan to tighten the rules for financial middlemen and custodians who store crypto on behalf of their clients. In 2022, there was a big trend of crypto companies giving each other risky loans and not doing enough research on the people they were doing business with. In a statement released late Tuesday, the UK said it wants to set up a robust world-first regime that strengthens rules around the lending of crypto assets, while also improving consumer protection and the operational resilience of firms. Andrew Griffith, the Economic Secretary to the Treasury, said in a statement, "We remain firm in our commitment to grow the economy and allow technological change and innovation. This includes crypto asset technology. But we also need to protect consumers who are using this new technology by making sure standards are strong, clear, and fair." The failure of FTX has made it more important for regulators around the world to try to control the crypto space, which doesn't like rules. The European Union and the US have already made their own plans to make crypto safer for consumers. Griffith said in a speech on December 2 that recent events in the crypto market make the case for clear, timely, and effective regulation even stronger. The proposals that were released on Tuesday would also make it harder for crypto exchanges to hide information. They would have to publish relevant disclosure documents and meet clear requirements to trade digital tokens. Another measure would loosen the rules on crypto advertising, letting firms that are registered with the Financial Conduct Authority put out their own ads while the wider crypto regime is put in place. Regulation takes time. Most likely, it will take years for Parliament to agree to the changes. The Financial Services and Markets Bill is still making its way through Parliament. If passed, it would make crypto assets regulated products. The goal of the law is to make the financial sector of the country more competitive after Brexit. Still, Some industry executives say that it's important to even just look like you're doing something. Having a regulatory roadmap or direction of travel will be very helpful for the UK as a crypto hub, Julian Sawyer, CEO of Zodia Custody, a crypto custody services firm backed by Standard Chartered, told CNBC in an interview on Tuesday. Sawyer, who co-founded the British fintech company Starling and led the international expansion of the cryptocurrency exchange Gemini, said it was also important to make sure that digital assets are treated the same way around the world. He said that the European Union was ahead of the game with its markets in crypto assets law, which is expected to go into effect in 2024. Will cryptocurrencies that are regulated become the new fiat money? If crypto is meant to be decentralized by design, how can it be regulated by agencies in the center? We are still stuck between allowing innovation and protecting the public when it comes to new technologies and financial tools. Cryptocurrency, stablecoins, and NFTs went from being a fringe fad to being widely used and intertwined with mainstream financial markets in a short amount of time. This has given lawmakers a problem they don't fully understand. This news story looks at the current state of crypto regulations, how they affect consumers, how they affect the economy, and what the future holds for crypto and compliance. Let's look at the most important parts of the future of cryptocurrency and compliance. All of these confusing regulatory discussions make things very hard for corporate counsels and compliance leaders who work in exchanges or other virtual asset service providers. It seems inevitable that the once lawless crypto market will be regulated, so a company's policies must cover how to follow these rules. VASPs also need to find accurate, real-time ways to manage and reduce regulatory risk, which is a moving target. Now more than ever, compliance officers should make it a top priority to use the best established processes for finding new and changing regulations, communicating with everyone who is affected, comparing the new or changed regulation to business processes, rating the risk, keeping the right paperwork and reports, and mapping the regulation to the business, products, and processes. Compliance professionals who rely on paper-based, manual processes could put their companies at risk of being fined. In a sink or swim situation, the crypto exchanges that make it will be the ones that work with regulators to make a plan for crypto's future success. Cryptocurrencies that are regulated, the next fiat currency? Even if the industry were regulated, cryptocurrencies would not be on the same level as other fiat currencies, which are real money. Speculative investing, NFTs, play-to-earn games, international money transfers, gold trading, fully pegged stable, and merchant payments are just some of the ways tokenized assets can be used on the blockchain. Millions of people who didn't have bank accounts or didn't have enough money in them are now part of the financial and economic system, especially in Latin America. Also, many people think that crypto will be the main way to trade in Web3 and the metaverse. In many ways, the question is not whether regulated crypto will become another fiat currency, but rather whether regulating the industry will change the nature of a decentralized and democratic currency. Putting aside the fact that crypto makes everyone feel like they belong, what sets it apart from traditional fiat currency is how it makes transactions easier and faster and how it gives some investors more liquidity. The industry of digital assets should welcome rules that make sense. The fact that cryptocurrency is regulated shows that it is a legitimate and common way to do business in the financial world. Also, volatility and instability don't help the long-term health of the industry, they only help criminals and scammers. A new study shows that crypto attracts more millionaires. Even though 2018 was a bad year for cryptocurrencies, a new survey by the financial advisory firm DeVere Group found that 82% of wealthy clients have thought about investing in digital assets like Bitcoin, BTC, in 2022. The survey results, which were made public on January 30th, showed that 8 out of 10 of the company's high net worth clients with between $1.2 million and $6.1 million in investable assets had done so in the previous year. Nigel Green, CEO and founder of DeVere Group, said that even though the study group is usually more conservative, people were interested in Bitcoin because it is digital, global, borderless, decentralized, and tamper-proof. Studies show that the interest of millionaire investors in cryptocurrency investments has grown. In 2019, the company did a study that found that 68% of high net worth people around the world had already invested in crypto or were planning to by the end of 2022. Also, a 2020 study by DeVere found that 73% of the 700 high net worth people surveyed already own cryptocurrencies or plan to invest in them before the end of 2022. Green thinks it's good for the industry that big financial companies like Fidelity, BlackRock, and JP Morgan are getting more interested in offering crypto services to their clients. In June 2022, PwC did a study of 89 traditional hedge funds and found that about one-third of them were already investing in digital assets like Bitcoin. The CEO of DeVere thinks that this interest could grow even more once the crypto winter of 2022 ends because of changes in the old financial system. The CEO said, Bitcoin is on track for its best January since 2013 based on hopes that inflation has peaked, monetary policies become more favorable, and the various crypto sector crises, including high-profile bankruptcies, are now in the rearview mirror. America's interest in crypto is growing. Over the past year, people of all income levels have grown their cryptocurrency holdings. J.P. Morgan Chase thinks that by December 13, 2022, over 43 million Americans, or 13% of the total population, will have owned cryptocurrency at some point in their lives. This is a rise from 2020, when it was thought that only 3% of Americans had done this. Ripple vs. SEC, final countdown starts. Will exchanges relist XRP, or will price miss another bull run? As long as the price of XRP stays around 39 cents, it doesn't seem to be affected much by the ongoing bearish market sentiment. Positive market sentiments for crypto are slowly building up, and the latest hearing of the LBRY vs. SEC lawsuit has given people new hope that they will win. As Coinpedia has already said, the January 30 LBRY hearing was very important for the Ripple vs. SEC case. The lawyer for the XRP army in court, John Deaton, made a strong case, which led the judge to rule that LBC tokens are not security. The Ripple vs. SEC case, which is expected to be finished soon, is likely to be affected by this case. As good news about the lawsuit came out, the XRP price gained a lot of bullish momentum. The XRP weekly chart is painted green, and the resistance is closer to the support than it was before. Wave 3 could start a bullish trend once the price hits the resistance. A well-known analyst who goes by the name Dark Defender and refers to the chart above says that the current rise in the XRP price is the start of Wave C. So, if the price keeps going in the same direction, it could break through the 40 cents level and reach a high around 42 cents. He does, however, add a clause that is bearish and warns that the price must hold at $0.3762 and $0.3602 if the offer is turned down. So, the crypto markets, and especially the XRP price, seem to be surrounded by positive market sentiment, which suggests that a big rise could be on the way. XRP lawyer gets a big win for Ripple and cryptocurrencies. Even though the case between Ripple and the U.S. Securities and Exchange Commission was not heard in court yesterday, attorney John E. Deaton helped Ripple, XRP, and the entire crypto industry win an important partial victory in their fight against the SEC's overly strict enforcement of regulations. At yesterday's appeal hearing, the SEC asked the New Hampshire District Court judge to confirm that he had issued a broad, vague injunction against the sale of the LBRY token, which makes the token itself a security and puts sales on the secondary market under the SEC's control. This could be bad news not only for sales of XRP on the secondary market, but also for all cryptocurrencies except Bitcoin, which the SEC has already said is not a security. Deaton, who is also representing 75,000 XRP holders in the SEC vs. Ripple case, talked about what went on in court in a recent video for Crypto Law TV. Everyone knows that the SEC likes to have as many ways to enforce the law as possible. That's why we got involved, he said, adding that the judge had done something great. He pretty much looked at the SEC and said, "You agree with him, don't you?" Everyone thought that was true. Do you agree with what Deaton says? This showed that the judge was willing to put his decision from November 7, 2022, in the right context. At that time, he gave a summary judgment in favor of the U.S. Securities and Exchange Commission and called every sale of an LBC token over a 6-year period an investment contract without explaining what the transactions were. This opened the door for the SEC to get closer to its goal of getting regulatory oversight of the secondary market to be seen as legitimate. But yesterday, the judge made it clear that the SEC was wrong about how to understand the ruling. The judge said the SEC needs to make a promise and gave 2 examples. The judge gave an example of a direct sale where LBRY sold its LBC token to an investment club that put it in cold storage. The judge said that he thinks this is an offer of a security that hasn't been registered, and the SEC agreed. The second example he gave was of the secondary market. Deaton reported. And then the judge said, but if Flipside sells it to someone else on the secondary market, independent of LBRY, you have to agree that my order does not apply to this scenario. And that's the victory that we got. The SEC had to concede it on the record, in real time. Remarkably, the judge turned to Deaton afterward and told him, "Amicus, I'm going to make it clear that my order does not apply to secondary market sales. This is why Ripple and XRP need to win so badly." The judge promised that in the final decision, he would make it clear that he was not making a decision about the secondary market. In court, the SEC has said that it doesn't think of secondary sales as securities. This is a huge partial victory for the entire crypto industry, but also Ripple, as Deaton further commented. This hearing today, if you think we are getting regulations by Congress soon, then the ruling is irrelevant because Congress will give us clarity. If we're not going to get any clarity from Congress, there's not going to be some regulation that says something that defines a security, then this hearing was extremely important. Ripple partner teams up with Visa to take over Thailand and Australia's billion-dollar markets, report. Recent news shows that demoney, a partner of Ripple, is now working with Visa. Thailand's biggest fintech company, which has been working with Ripple for 3 years, has joined forces with Visa to fully integrate Visa Direct into its global payment platform. With this partnership, users will be able to make international payments at the speed of light. Visa is a global payment system that is used in more than 170 countries and can be used with more than 160 different currencies. This will be easy for Thai demoney users to use, and all they will need to send money is the recipient's Visa information. The fact that this partnership saves time makes it very appealing. Visa says that 30 minutes is more than enough time for the person getting the money to get it. Unlike when traditional ways of making payments across borders were used. Aswin Flafongfanich, who is the CEO of demoney, talks about what Visa is good for. He said that Visa is great for real-time payments because it is fast and safe. This partnership allows our customers to send funds directly to their friends' or family's debit card accounts in real time to more than 170 countries in over 160 transaction currencies. It also enables real-time payments 24/7, including weekends and holidays, which are not feasible with traditional bank. The partnership between demoney and Visa is based on its earlier partnership with Ripple. The goal of the partnership was to make it easy and cheap for their customers to send money across borders in Thailand. The International Bank of Australia got a license from RBI. IBOA, the banking arm of Navati, can now do all of its business in Australia. The Australian Prudential Regulation Authority gave the restricted authorised deposit-taking institution license to the International Bank of Australia until November 2, 2024. With this license, IBOA can offer banking services to people in Australia. It also gives Navati the chance to spread its payment solution for payments into and out of Australia across borders. Peter Cook, the current managing director of Navati, in a statement said, "Being granted a restricted banking license is a very significant milestone in the delivery of Navati's long-term strategy, and is the culmination of several years of investment and development." Recent tweets from Australians living outside of Australia show that this licensing approval makes them happy because it makes it easier for them to do business across borders. Guy Carvalho, the acting CEO of IBOA, said in another statement that this is one of IBOA's main goals. Fintech partnerships were named as the top priority. The bank that just got its license knows that traditional banks haven't been able to keep up with how fast fintech solutions change things. This is especially true for banks that have other ways to make payments locally and internationally. So, it planned to work with Navati to use technology to stay ahead of the competition. XRPL Labs will make it possible for Zoom users to pay with QR codes in stores. Wyatt Wind, the lead developer at XRPL Labs, let slip that developers are working on a QR payments feature for the Zoom wallet that will be powered by XRPL and let users pay in stores. Monday, the developer tweeted about this. It came after a user asked for a debit card for their Zoom wallet. Instead, Wind suggested a QR payments feature and said it would come sooner than users expect, which suggests that it is already in the works. Why a card? Wind said this as a question. What about QR payments in stores that are powered by Zoom XRPL? Will happen faster than you think. Developers at XRPL Labs aren't sitting still, and it looks like the Zoom wallet is quickly becoming the Everything XRP app. Last week, it announced a new feature called Zoom Profiles. This will let users link their XRP wallets to a username and profile picture, which will be verified by ID documents to stop people from pretending to be someone else. The feature, which is only available to Zoom Pro wallet users right now, will make transactions easier and less likely to go wrong because users will be able to send XRPL assets using usernames instead of wallet addresses. Taking into account the benefits of the distributed ledger, a QR payments feature for stores could change the way XRP and other XRPL assets are used to pay for things. On the XRPL, transactions take 3 to 5 seconds and cost almost nothing. Developers are also working on an app called Buy and Sell XRP. When it goes live, users will be able to choose from a list of providers that offer on/off-ramp services for XRP. This will let them buy XRP with fiat currency or sell it for fiat currency. It gets rid of the need for centralized crypto exchanges, which is a big deal. The embedded web app will have a solution from Zoom and partners like BTC Direct and Banxa. Ripple says that demand for its XRP-powered liquidity solution is at an all-time high. FinTech's most recent quarterly XRP markets report came out on Monday, January 30, 2023. It has information that XRP hodlers will be interested in. According to this report, there was more activity on the XRPL blockchain even though the cryptocurrency market as a whole was going down. After the XLS20 change was approved on November 2, 2022, the number of NFT trades on XRPL went up dramatically, reaching more than 3 million. Even though the number of transactions went up, the amount of XRP paid in fees went down by 33%, and the average cost of a transaction in USD was very close to $0. At the same time, the average cost of a transaction on Ethereum was $2.75 and on Bitcoin it was $1.23. Ripple also said that it ended the year 2022 on a high note, having made a lot of progress in the cryptocurrency market. With so much interest from both new and old clients, the company has focused on growing its on-demand liquidity service. This payment solution that uses cryptography is now available in about 40 markets. This is a big change from 2 years ago, when it was only available in 3 markets. With the help of Lemonway, Xbot, and MFS Africa, Ripple recently expanded its ODL service to France, Sweden, and Africa. This move not only brought in more customers for the company, but it also let corporations try out the benefits of making cross-border payments with cryptocurrency. Since it started, RippleNet has processed about $30 billion worth of transactions and 20 million transactions. In 2022, ODL was used for 60% of these kinds of transactions. Thank you for watching. Please subscribe for regular updates in the blockchain community.